Good afternoon, everybody. I'm Stacy Scott, and I handle the marketing and client relations here at Wickham Financial and Insurance Services. And I'm here with Graham Wickham, President and CEO. And Graham, it's been about 2 weeks since we've had one of our weekly wrap-ups. I understand you have been touring the national parks with your family this summer. Welcome back.
Yeah, thank you so much. And thank you all for being on the call. Listen, that was an incredible trip. I was fortunate to be on for almost a couple of weeks with my family. So if you can get out to the canyons, out to the west, visit those national parks, please do. What a great experience. Last week and over the last couple of weeks, we really saw the markets really bounce back. We saw at least last week, the S&P closed above a 50-day moving average for the first time in 3 months. Is that signaling a bottom? Or is this maybe just a short-term bear market rally? We'll just have to see. Is it something that we can build on and up from? Again, I think we need a little bit, probably a little bit more time. Even though we rallied at the beginning, over the previous week and a half, we closed at the end of the week down, a bit of weakness, but not surprising, because it was pretty strong leading in to the end of the week. We saw the Russell and the Nasdaq up about 3%. The S&P was up 2%. We saw 9 of the 11 S&P sectors up and positive. And I think interesting enough, consumer discretionary, which has been extremely weak, up about 6%. So the big gain there, 4% for materials and energy and industrials. But we did see crude oil kind of pull back a bit. Treasury yield really tumbled. I mean, wow, we were on the 10-year like around 2.7, 2.8. So that's borrowing costs coming down, maybe fears of a slowing global and domestic market, because we did see U.S. economic numbers begin to really hint at near-term recession. Now, keep in mind, our opinion, we said this all along, we do feel it's going to be light. We'll just have to see if that will come true, and it doesn't have to be a deep, protracted recession. So we do want to see softening economic numbers that we illustrated in our Lunch and Learn, that rollover in commodity costs, hopefully coming through in the CPI data to be released, I think this month, as well as the Fed meeting, earnings being released right now, which is a lot of information all coming out over the next couple of weeks. We did see U.S. data, home data, really deteriorate, 5.4% month over month. That's down 14% year over year in June. Again, this isn't unexpected numbers. We know when interest rates rise, borrowing cost goes up, maybe sales go down a bit. So not completely surprising and probably welcome to cool a bit. We did see globally the ECB for the first time raise interest rates 50 basis points. And that's the first time in 11 years. So you're really seeing a global coming together to try to tamp down and hopefully calm down demand and high inflation.
Okay, well, that's a lot of information, Graham. I do understand that the U.S. dollar has increased in value over other currencies. How do you think that would affect us here stateside?
Well, it's not necessarily bad to have a strong dollar, but you don't want to have it so strong that it deters international buyers from buying our goods. Because when you talk about exchange rates, it can cost a lot more or cost more for them to buy our goods. Maybe it deters them from buying our goods and they buy somewhere else where they have a more favorable exchange rate. And that can affect domestic companies that derive a good bit of their revenue overseas. That can hurt their profits and revenues. And we might be seeing that. I know we're hearing a bit of that coming through in some of the some of the corporate earnings that we're seeing right now. Again, we're 2 weeks into the corporate reporting. This is a big next couple of weeks to a month. It's going to really set the tone of what we look like going through the rest of summer into fall.
All right. Well, thank you so much for that. And thank you to our viewers for joining us today. And I just have a couple of reminders for you. We have some things on the calendar. First and foremost, we have our monthly Lunch and Learn scheduled for this Wednesday, July 27th at noon. And we would love for you to join us for that. We've sent out an invitation via email, but we also have a link on our website. So go ahead and register and join us for that. Also, beginning next week, we have our Retirement Planning Today session, and that is a multi-day course which really covers the A to Z everything that you could possibly need to know about the retirement planning process. And Graham does a great job illustrating that for the attendees of the class. So, you know, maybe you are already prepared, but somebody you know is at or near retirement age. So please pass that information along to somebody who would benefit from joining us in class. And again, you can see that on our website or just give us a call. We'll be happy to get them signed up. Thank you again for joining us today, and we'll look forward to seeing you again, if not this week at the Lunch and Learn, then next Monday for the weekly wrap up. Thanks so much.
Take care.